Welcome to the show designed to give you crypto confidence. Created by the marketing communications specialists at BlockSparks, we want to help you learn about cryptocurrency and blockchain in a safe and friendly place. Because we believe this stuff is far too exciting to leave it to the geeks. Come and join us to learn more. Hello, Crypto Confidence listeners. If you're new to our podcast, we welcome you warmly. And if you've been with us for any length of time, you'll know that we make our best effort to demystify terms which get thrown casually around in the cryptocurrency world and related spaces like the financial world. We want to help promote better understanding. Indeed, sometimes terms get misused or misapplied, and this can have serious consequences. So it's vital we grasp the principles in order to make informed decisions. One term you will hear bandied about in terms of investments and assets, both within and without the crypto space, is liquidity. How runny is your money? What do we even mean by this? To help us understand this essential concept better, we're very pleased to be joined today by Bill Smith. Bill is currently the CEO of a cryptocurrency startup, CryptEquities, Inc., which is working to bring liquidity to shareholders stuck with illiquid stocks. So welcome, Bill.
Hi, good morning. Well, afternoon to you.
Crypto is global, so
That's
morning,
right.
Afternoon, evening, wherever we are, we could be being listened to at any time too. So that's what we love about podcasting. Bill, please tell us a little bit about yourself and your journey into this space.
I actually got into this space, I guess, by divine appointment, whatever you want to call it. My background is I've taken a couple of my companies public on the stock markets. And in 2017, I was in California. And I was doing business with a friend of mine, and he said, "You need to buy this stuff, Bitcoin. It's only at $400. And I thought, "Are you stupid?" and he says, he's trying to explain to me. I said, "Well, what is it backed by? Where is the underlying assets?" "Well, it isn't. I'm sorry, that's crazy. I can't invest in something like that." Needless to say, when Bitcoin hit 20,000, my foot promptly kicked myself in the tail. And I really began to look into cryptocurrencies as a new emerging, let's say, business model, asset model. And I had to apply my stock background thinking to it. And I began to see that there were going to be regulatory agencies going to step in one day. Hopefully the SEC, not the CFTC here in the U.S., right. And that it would become a legitimate market. Mm-hmm. And it is the only market that trades 24/7, 365. Forex trades from 5 p.m. Eastern Standard Time Sunday till 5 p.m. Friday, and stock markets open and close daily. So this is kind of a unique market that it goes on around the clock all the time, and I really wanted to learn more about it. So I was helping an AI company in Redwood City, and we were looking for a way to tie the psychologists, therapists, coaches to clients. And my friend who was doing the cryptocurrency meetups came to the house and spoke to us about it. And I was like, wow, this would be a great tool to connect. And that's really what pushed me into delving more into the cryptocurrency world. And I knew that sometime soon it would change, which seems to have struck around the tail end of 2018 till now. So I just see it as a new asset generating, wealth creating tool that didn't exist several years ago. So
it's so fascinating, isn't it? I love people's origin stories because nobody had a plan for this. I suppose Satoshi had a plan, but none of the rest of us knew what we were getting into. And so many people I talk to have that story of they met someone when it was a few $100s and or met somebody who was mining 6 years ago or something. I thought, what an idiot.
What an idiot, right.
But there's only any point in looking forward, really, isn't there? But we all bring our different backgrounds to it. And what's really interesting is that yours was in the stock market and in understanding business from that angle before. So I guess that makes you uniquely placed to help us understand this critical concept of liquidity. What does that mean?
Right. So in the stock markets, primarily in the U.S., we have major stock markets like the New York Stock Exchange, NASDAQ, Amex, and then we have the OTC, used to be called Pink Sheets.
Mm-hmm.
And few small investors have NYSE stocks unless they inherited them or they got lucky at the foundation of a company. But probably there are more investors in numbers in the OTC markets, which means over the counter.
Right.
And the issue there is one of liquidity.
So would that be a stock that you just invest in a company because you want to back what it's doing?
Oh, yeah. And it's a penny stock.
Yeah.
So that means the cab drivers, the ladies at Jared's jewelry store, or the guy that works behind a bar can buy stock at, a penny, sub penny, 10 cents, 20 cents, and go, I'm a stockholder.
Mm-hmm.
But the issue comes to be in play when can I sell my stock?
Right.
And therein lies the issue of liquidity. And, having taken two companies on the markets, my second company gave me a net asset value of $30 million in 1 year because the stock went up. But my liquidity issue was because I was the CEO of the company, the governmental rules would not allow me to sell my stock. So I had this great big wealth, but I couldn't sell it.
Mm-hmm.
So if you take that premise and look at somebody that's buying stock at 10 cents, 20 cents, hey, all it's got to do is go to 20 cents or 5 cents and I'm, woohoo, double my money.
Yay.
Yeah. And therein lies the reason the OTC market exists. And there are less regulations and less transparencies. So when I began to look at the OTC, the cryptocurrency markets, I knew, this is my opinion, that one day we would have a NYSE type cryptocurrency exchange. We'd have a NASDAQ type exchange, just different levels of companies. And then we'd have the Wild Wild West or the OTC. And even today, there are many cryptocurrencies trading at penny or sub penny that have some volume, some don't.
Okay, so to help me understand properly, you're talking about the difference between an exchange with an order book where it's right. Like you're trading against the exchange in a central place, whereas the OTC is people buying and selling from one another. Is that correct?
Well, no, actually, everything passes through some sort of an exchange, and that's exactly what's happening here in the U.S., especially with the cryptocurrency world. Is the government now is regulating these exchanges like Binance or CoinMarketCap or whatever, and Kraken, and forcing them to comply with stock type laws, rules, and regulations.
So we all had to upload our IDs and things,
correct,
which we didn't before. Yeah.
KYC, know your client, AML, anti-money laundering, all of the standard financial industry rules and regulations became in play, and that happens when you're dealing with massive amounts of money, and some of it just stupid money. I looked at some cryptocurrencies and I'm like, why does this exist? I don't see a purpose. And, that attrition of fallout has already begun. And one of the reasons that a lot of these cryptocurrencies die is the company can't raise capital because their currency is illiquid. There's no market for it. Nobody wants them. And when that happens, if I own cryptocurrencies in something that's illiquid, how do I sell it? Who wants it? Because there's the exchange is the intermediary between me and a buyer. So I may have to drop my price down even below what I paid for it in order to get somebody to buy it, if somebody even wants it.
Okay, so would that make an asset illiquid then? The fact that you would have to let it go for less than you put in order to get your investment back out? Is that a way of looking at liquidity?
That's a way of looking at it. And the other thing is prices can drop, like on the stock markets on OTC, can go to 0.00001 cent a share, which is you might as well take a penny and take a little file to it and scrape off a little scraping saying, hey, this is what my stock's worth. Who wants to buy it?
Yeah.
So that's going to happen in the cryptocurrency world, I believe, is as these governments, and no matter what nation you're in, everybody's forming some form of governance over this industry. One concern I see them having is, hey, by the way, people won't need us anymore for our money. They can use cryptocurrencies and work outside of our financial world.
Yeah, that's going down well, isn't it?
Oh, yeah.
Yeah.
That's swallowing a bullet. So that's another layer of things that will happen, which is what forces these regulations to come into place. But I'm also seeing banks adopt cryptocurrencies now. Here in the U.S., Bank of America is developing one. J.P. Morgan is developing one. Stanley's is developing one. I think Wells Fargo is working on one. And I saw a statement where one bank figured that if we put everything on the blockchain, all of our money, then we would save $850 million a year just in wire transfer fees.
Wow,
in other words, that money gets to stay in our pocket.
It certainly doesn't flow back to the customer, right?
No, not at all. You'll still be charged something.
Yeah.
So, when I look at a liquidity, the cryptocurrency we're building is we designed it specifically to take a liquid stocks off the OTC market and acquire enough of they're still an asset, these assets on book, to turn some of these companies around because we have experience in this field. And that's the premise for what we're doing.
Okay, so you're taking a physical stock, which could be a share in a company, and turning it into a digital analog.
So you give us your stock in Joe's Plumbing that's worthless, and we give you our token. And as we put that on the market on an exchange, you'd be able to liquidate at least some of the asset money you put into that stock. And we work off a current asset value of the stock. I have a company that I still hold 200 and some million shares of, but it trades at 0.0001 cent a share. So it's like a couple $1,000 worth of stock. And that's why this started will this stock ever be worth anything? And the answer is no, not with current regulations today. So the cryptocurrency world opened up a new plethora of possibilities to bring liquidity to markets that I believe will never see liquidity again in their current state.
Okay.
But we're looking at the asset value, not the liquidity value per se.
Right. Okay. I mean, understanding that difference is still quite challenging, but I suppose when we think of selling on that kind of a stock in that way and repackaging it as something else, I'm sure a lot of people will be reminded of the financial crisis and securitization. How does using a blockchain protect us from the kind of things that went wrong with the financial crisis?
I don't think there's any protection in anywhere in the world in anything, to be honest. It's a value of risk versus reward.
Yeah.
I mean, that's why you buy a stock. I'm risking a few $100s or thousands of dollars in the hopes, anticipation that it will grow and I can get back millions of dollars.
Yeah. And because you believe in
that does
somebody
happen.
who's backing it, I guess, and building a company that they're going to succeed.
Our laws in the U.S. particularly are geared towards wealthy individuals. The rich get richer. They get advantages that people that are not what are called accredited investors can take advantage of and get into stocks like Facebook and Uber and Airbnb and so on that the average consumer can't until the stock gets to a certain market or to a certain liquidity level that makes the government happy. And that's what I'm seeing coming into the cryptocurrency world. ICOs, for lack of better terms, are dead, especially here in the United States. So, of course, everybody in the United States is looking like, well, how do I go to another country and do what I'm doing without the government oversight and regulation? So there are still some open doors in places like Malta and Philippines and Isle of Man and different little island nations that will allow us to do things. But that also means there are scammers out there too. And that's what a consumer at an investor level doesn't have an awareness of, because most people don't do due diligence. They don't really look into the company.
Yeah, I suppose they don't really know how to do it effectively. Right. I'm sure it's just a kind of lack of knowledge, I guess. And I know that a lot of ICOs and token sales under different models and hats around the world have ended up excluding US investors anyway, haven't they? Because they just can't find a way to legally sell tokens.
Well, and then China shut the door, and Korea and other nations, because they're number one, they don't want their money leaving the country.
Yes.
And once it gets on the blockchain, it's now a global currency.
Yeah.
It can be traded. You can come over to the United States and liquidate it in California if you're a Chinese citizen, or anywhere else in the world, where if I have Chinese yuan, I can only do it through the Chinese National Bank. And that's what I believe scared the banking industry and the regulatory industries to put in place measures that would govern the companies into compliance, which again is another choking factor for liquidity because it's expensive. To hire lawyers and to go through an STO or an ICO back then, whatever, costs thousands or hundreds of thousands of dollars. And there are companies in the United States right today who have done ICOs, have raised hundreds of millions of dollars that are now being sued by the federal government, which will make that stock or cryptocurrency illiquid because of all the lawsuits.
Yeah.
And I think one of the companies I just read the other day, they spent $5 million in legal so far to combat the Securities Exchange Commission.
Ouch. And that's all tiny people who, the mums and pops who bought at ICO, a few tokens here and there.
So $5 million of their money went to pay lawyers.
That's terrible. I wonder if they've built anything yet with the rest of it.
No, I think they were losing $30 million a year in burn rate. They haven't developed a technology that works yet. And that happens whether it's a stock market or a currency market, whatever. It's a fact of life. Very few companies ever succeed. If you go look at CoinMarketCap and look at, the top companies like Bitcoin and Ethereum, it doesn't take long when you go down that list to see all of a sudden the volume of trading drops off significantly.
Yes. Outside the top 10 or something, it's just off a cliff, isn't it?
So let's call them the New York Stock Exchange type cryptocurrencies. They're the big dogs. Right. And then you're going to have another group, probably a few hundred of them, that would be average middle income. They'll actually developing a real technology, whether it's cryptocurrency based or commodities based or business based. And then there'll be the rest.
Yeah, we'll find a different word for those. So those ones in the middle would be the ones that if you have an appetite for speculation and you think you might have some inside track or a hunch or whatever, and you spread yourself around, then you could stand to make very big returns.
Correct.
But it's riskier.
Which is the same science behind a mutual fund. Spread the money over a few, and some are going to be great, some will be and some are going to be Yes. But overall, you win.
And then you get down to the ones that, not even penny stocks, Satoshi stocks, right down the other end of CoinMarketCap.
It's interesting to watch the emergence of this market, and I've never gotten to see the creation of a whole entirely new market, and it's fascinating to watch it emerge and go through the phases and stages. In 2017, we had a money market manager working with us, and she goes, I can't wrap my head around this. It's not backed by anything. I said, I know, we're tokenizing air.
Yes. Don't tell everyone that.
But in reality, if it went bankrupt or whatever, the underlying company can still function. The token's worth.
Absolutely. And nations go bankrupt, nations disappear. So any dictator can say, this is my money and I back it, my fiat currency. Where do you want to put your confidence, I guess, is who do we believe in?
I was in Florida when the euro was coming into play, and our business was gray marketing boats into Europe. So I would, on the east side, go find yachts and ships and ship them into Bremerhaven, Germany. My partner would pick them up and take them to Spain, and we could build our own little niche market until the VAT tax was going to be based on the European or the German economies at 28%, which took away the incentive for people to buy these boats and ship them down into Spain and down into Italy, because now they were going to be taxed the same. So that killed our business. And these type things happen. And then I've watched the European Union try and break apart and hold itself together and try and break apart and hold itself together. And, you have Brexit going on. So this type of dichotomy goes around globally every day of the week. And it's all affecting money in some way, shape, or form. And, we can usually get into a good deal, but I think most people invest out of, ooh, looks good.
And I don't want to miss that.
And right. When I took my first company public, the guy that I bought the shell company from said, well, call one of your friends and have them go buy some stock on the market, like $100. I'm like, oh, okay. So I called this lady friend of mine up and she said, okay, can I tell a few of my friends? I'm like, yeah, sure. But I've got to submit this report by 5:00 today.
Right.
I started getting calls from all over the nation. Can I get something? And within like a few hours, I'd raised $150,000, and I wasn't even raising money. But everybody wanted to get in before the ship took off.
Are you sure it wasn't an ICO?
Well, an ICO, initial coin offering, is no different than an IPO, initial public offering. It different language. In fact, in the documents we use a SAFT agreement. And there's a SAFE agreement. So one has to do with equities. The T1 has to do with tokens. Same verbiage, same language, except shares or tokens. And, now that the ICO has died off and STOs are coming up, which is a stable coin offering, that the currency, cryptocurrency, will now be tied to something tangible, a house, a car, a dog, or a chicken, stock, or whatever, in our case, stock markets. And it will pay dividends and be treated literally just like a stock. And in fact, in July 1st, just a few weeks away, the state of Wyoming has passed legislation that they're calling cryptocurrencies fiat money. It's real money.
Wyoming seems to be leading the world in regulation and what they're doing.
Well, right. And they're becoming proactive versus reactive. And, it was shocked to find out that the LLCs we use in the U.S. actually came out of Wyoming. It was created in the state of Wyoming. It's like, oh, wow. So I believe that's going to be a game changer because that will now cause banks to accept cryptocurrencies where most banks have shunned it. They don't want you wire transferring money into a cryptocurrency. We can't take payments in cryptocurrencies. So this interesting shift and change, I think, is going to affect everybody globally before this is over with. And, I can see where, in a way, they've talked for years about a one world currency. Cryptocurrency can facilitate that, whether we like it or not, because it does operate around the clock, around the world, all the time. And it's being improved on consistently. So I believe there will be companies that will be greatly liquid, like New York Stock Exchange shares. They'll be highly valued, like Bitcoin. And then there are always going to be the little guys. Hey, I was thinking about making a cryptocurrency for cats. And somebody will buy it.
Ended up being worth more than any of us would have dreamed, but yes.
Isn't that crazy?
It just goes to show anything can happen in this market, I guess. But
and that's the great thing. And the sad thing, is on the asset creation side of the world, I look at it and go, wow, people are creating value out of something that really has no tangible value other than a perceived value. And that's going to cost people down the road when that company kind of ceases to exist or function and there's no liquidity in the currency. And I don't particularly like regulation, but I understand that there is one of those necessary evils, I guess, in a way.
Yeah, it's a constant conflict, though, isn't it, between the kind of the Bitcoin original vision of a libertarian peer-to-peer, completely unmoderated exchange of value and the regulation we're needing now. How do you think that conflict is going to play out in future? Is regulation definitely the way we're going?
Well, my friend Charles and I in California debate this all the time. Well, this is decentralized and this, and this. I said, listen, Charles, I don't care what your opinion is. Somewhere along the line, the government's going to go, hey, there's a lot of money in this. We better regulate it. Yeah. Why? Because We can't let people have free money. That's stupid. And, you're creating value out of thin air. And so, in fact, they're launching one for a company he's involved with that, well, we're going to do an ICO with a utility token, and then we're going to create a security token. And the utility token, I said, listen, in the United States, the government has a 10-year look back. And I guarantee you, right now, they're dealing with all the big dogs and trying to make a case for what they're doing. But one day they're going to, okay, we've got all the big guys compliant. Now let's go after the little guys. And I said, I don't want to.
And they'll have bulletproof law and precedents at that point. It'd be dead easy for them to just be all over that ICO.
Well, the little guys aren't going to have $5 million to defend themselves.
No, that's all going to go wrong then, isn't it?
Right. So I believe eventually there'll be an over-the-counter type market for cryptocurrencies that are thinly traded, highly illiquid, still have a kind of a cool story, but if you were to look past the currency into the company, nobody's home.
Yeah, they're probably long gone. So just to unpick those terms a little bit, does thinly traded relate to the volume?
Well, it's like, let's say I have an apple orchard. And I take all my apples and I put them in my little cart and I shove them out in the middle of the Mojave Desert. And I'm waiting for customers to come walking by. Great value, great asset, but they're not customers.
Right.
Thinly traded.
Okay.
Now, if I take that same little cart and I push it down to a shopping mall where there are hundreds of people coming by every hour or day, I have a higher chance of liquidating those apples. And why was I in the desert in the first place?
Well, would people pay more in the desert, I suppose, because maybe they're thirsty or whatever?
That's the premise, too. It's more valuable in the desert because there's a little bit of juice in it. I might survive. I'll buy two. It's the value is whatever you can get out of somebody. But in an open market, it's what does the market believe it's worth? And that's why you see price fluctuations. And then we're in 2018, you started seeing hedge funds get involved in this industry. You started seeing EFTs come in. You started seeing all these different businesses that work in the stock commodities futures market go, ooh, cryptocurrencies. And they
Should
began
we start paying attention to this? Yes, finally. Yeah.
Now they're shorting it. Now they're saying it's really not worth 20,000. Let's bring it down to what it's really worth. And, those are the changes, just like if you build a house in a neighborhood, at first everybody that lives there is all usually owners. But one day an owner dies off and a renter comes in and somebody else moves out and a renter comes in and that neighborhood goes through transition and shift and change.
Right.
And so, it degrades. And then somebody comes in and go, wow, cheap houses, because the value's dropped, and they come in and they fix up a house, they fix up another house, and then it goes through another cycle of life. And I don't know that there'll be a second cycle of life for cryptocurrencies that fold, except, and this is the debate Charles and I have, he said, I want to buy some of these companies up for their underlying technologies. And I'm like, oh, they're trading air. That's no technology.
Yeah, you need to find the ones that have actually got some underlying technology, not just a pretty white paper describing a technology they would love to invent.
I've been fortunate to be involved in some really interesting technologies in my life and industries. And, I've watched rich get richer and rich get poor, and I've watched poor get rich, and I've watched poor get poor. And in those life cycles, it's people typically not doing enough due diligence. Are you really looking at, is this a real asset? Is it a real company? Does anybody want it?
Is there a problem to be solved here? Is there an actual need for this solution?
Correct. And there are some of these things being invented that aren't. I think the companies that are going to make it big will be companies that are improving the blockchain or speeding up the blockchain or providing liquidity to the consumer. It was weird, and I say it in this context. I was with my friend Charles out in California, and he was going through a little shindig meetup, and we went into Walmart, and he was buying some platters and stuff, and he pulled out his Bitcoin card, and I'm like, okay, I'm going to watch this sucker explode. This is not real money. This is theory money, and he's going to put this thing in this Walmart debit card reader, and it's just going to go, you're stupid. And it took it.
Yeah.
And I was like, I was shocked. So that was another shift of dichotomy I had to do in my own brain.
Yep, you can pay for things with magical internet money. Yay.
Yeah.
But that's the game changer. That's what makes the difference.
Well, it is. And that's where the exchanges come in.
Yeah.
And, I remember when you could get on some exchanges, it was 2 Bitcoin. When Bitcoin was at 1,000, that's $2,000. That's not bad.
Yeah. Wow.
But when Bitcoin was at $20,000, it was still $40,000 to get on that same exchange. So, and then lawyers figured out that they could get stinking rich, charging payments in Bitcoin and Ethereum, and all of a sudden their rates went through the roof. And, even recently with our project, I talked to some attorneys, they're ding-dongs when it comes to this industry, because they're trying to wrap some traditional business, and then they're trying to skirt the securities laws that are coming into place. And since I have a background, I'm going, I'll get back to you.
Yeah.
3 days after hell freezes over, and we'll have a conversation then.
Yeah, it's going to be a few temptations to say that you warned them,
right? But
you could only do your best, right?
So you have a lot of factors that affect the liquidity of a stock or a cryptocurrency. At the end of the day, there has to be a real business underlying it that has a value to a mass of people that causes this asset, this business, this idea, this technology to be valuable. And, Ethereum, Bitcoin and Ethereum are, because they're the backbone to most of us. So
everything's built on Ethereum. Well, I know there are other sort of native blockchains now, but certainly putting all those factors together, as you've described, the volumes, the liquidity, and the technology, there are so few that we could really describe as solid and tried and tested. Even though we don't give investment advice on this show, you've only got to look at the numbers, right, to see which ones.
Numbers, the company, the players, and the people. And what are they doing? What are they creating? What are they adding to the world? And how big is that? One day tractors replaced donkeys and plows.
Yeah, who'd have thought?
Who'd have thought?
But we got used to it, didn't we? And we managed to build a whole new infrastructure and regulatory system around that. Despite initial resistance, we managed to change the way we do things. And it's interesting.
No matter what nation you're in.
It's great talking to somebody who's been through some different cycles of business and technology as well. There are so many people, amazing people I meet in this industry, but they're really young and they're digital natives. They've grown up around the internet as it more or less is presently, and they've never witnessed that transformation that happened to us in the 90s.
I believe they're going to live in a world that would warp our minds. I remember when my daughter was probably like 7, 8 years old. About 8 years old. She goes, "Daddy, you need a smartphone." I was like, "No, I don't. I have a flip phone." "You need a smartphone." "No, I don't need no. And you need to text." "I don't text. I talk to people." And a friend of mine gave me a smartphone. I didn't even want it. And she's showing me how to use a smartphone. I was like, "How do you know? You're a kid."
Yeah. Oh, I think they're just born knowing
and
now.
I think they are. I believe it's just something that's ingrained in them that we didn't grow up with. And we look at it and we'll poo-poo on the idea for a while until we understand that this is now part of the world and you can change with it. In business, I remember when Facebook came out, and all my employees, "You need to get on Facebook and you need to do this." I said, "That is a waste of time. I'm not going to sit around looking at pictures of dogs and kitties and kids." And boy, was I stupid.
Well, yeah, I can remember people saying, "Well, I don't think we're ever going to need one of those website things, do we?" No, not for our business, because we deal with real people. No one's ever going to need. I don't think many people are going to need a computer. But you have to have lived through those kind of revolutions, I think, to be able to see the potential for the shift that's coming upon us and our children's children.
I think it would warp our brains to know what they're going to see in their lifetimes. My first website was built in 1997. I think I had $65,000 of my dollars in it. And today you can build one for, a couple $100.
You could just go and do it yourself with free tools in an afternoon.
Yeah. I mean, it's when I try and tell, oh yeah, there's 60 some grand, people say, you're stupid. Go here, go click here, go click here. When my friend in California was starting up his company, I was helping him out. And I just felt like, well, let me go look at website building again, just to see what's changed. And I'm looking at a couple of YouTube videos. They didn't exist in my day. And he came over and he said, well, I'm going to pay this guy like $1,200 to build a website. I said, great, go for it.
Yeah, unthinkable now.
I said, do you have any money? He said, no. I said, what's the matter? What do you want me to do? Build it for you? He goes, yeah. I was like, oh, you're crazy. But it forced me to learn something new. Just like in his business, I had to learn about artificial intelligence. I had to learn about cryptocurrencies. And his company never took off. His mind was in too many different places. But I left with a wisdom, a knowledge, and an understanding that I only got through that experience.
Priceless.
And priceless. I mean, I can do, it's just an opportunity. I can do something with it or nothing with it. And I chose to do something with it and use it as a tool. And I believe there are great things that can be done with it. And this idea for CryptEquities, I was drinking coffee about 3:00 in the morning one morning, just sitting there being quiet. And it just kind of popped in my head again about the illiquid stock markets. And I'm going, well, there's nothing you can do about it. It's too bad. And then it's kind of like, well, take the CryptEquities, cryptocurrency thing and tie it to this and do this and this. I was like, wow, that's like smart. Yeah. I know it's not me. And I called a guy that was in what we call the reverse merger, reverse IPO, shell market business. And I said, what if this and this and this could happen? He goes, wow, that's smart. I was like, okay, I know it's not me then. Got to be somebody smarter than me.
You keep going around looking for somebody to disprove it, don't you? That's when you know you might be onto something.
Yeah, I was hoping it wouldn't work. But within relatively short amount of time, 2.5 months, we had a website up. The premise for the business was coming in. We began to look at all of the new issues with the SEC, what they were looking at, what they were going to do, who they were suing, and realized, okay, we don't want to be in the suing pile, so let's
try and be compliant.
Use the stock knowledge we have and apply it to this and try and be as compliant as we can. And that's the stance we're taking is, Charles still believes in the wild, wild west, do whatever you want to do, create an ICO. And I'm like, boy, you're going to be sued. It ain't it, it's when. I don't like that pile. And in fact, Joe, the guy that I bought shell companies from before, said, I don't want to be sued either. I said, me either. So let's be compliant from the start. So you're seeing the emergence of the STO, the stable coin offering. And that means the cryptocurrency will be backed by some form of asset. In our case, we have cryptocurrencies and we have stock. So we're building a hybrid company.
So your token is a stable coin securitized with monies and stocks. Right. Okay.
Correct. So 80% of all the asset value goes to the cryptocurrency side and 20% goes to the stock side. And as we build and clean up these companies and we sell them off, so there's a company I can buy for like $5,000. We'll put about $25,000 in it. We'll clean it up, and we should be able to sell it for $150,000. Or we can put a technology in it and build a multi-million/billion-dollar company out of it. And then 80% of that wealth flows into the cryptocurrency side and 20% in the stock side. So have been looking at stabilizing the business from the start. And I think that's how we see ourselves growing over time is out of the 8,000 stocks on the OTC market that are all illiquid, if we cleaned up a few thousand of them and turn them into real companies with real technologies, because now there's another player is a lot of these cryptocurrency companies will want to go public, and the reverse IPO is the fastest, cheapest way to do this. So an example is there's a company called SNGY. In January, it was a dead company, illiquid. And they merged a cryptocurrency company into it. The asset value of this dead company 6 months later is $1.5 billion.
So did the founders buy that back? Did they get
No.
back into it?
New
No.
guy, a cryptocurrency group bought the shell,
Right.
ran it through the processing, and have a company that's worth $1.5 billion right now on the stock market.
Fantastic. And it's actually fueling the whole cryptocurrency market as well. Because that's the thing I really like about working in this space. And it's the reason we do this podcast, even though we don't have any specific funding to do it. We feel that it helps all of our clients and all of the people we're working with just to bring new people into the space and bring new understanding. There's this sense that things are still so nascent that it really does. The rising tide supports everybody
equally. It's been
equally.
a pleasure.
It's really powerful. I don't think you can say that about any other industry.
No, you can't. I really had a shock. We were in California, and my wife and I went into a Jared's jewelry store, and I got to talking with the clerk behind the counter, and she goes, "Well, what do you do?" I said, "Well, I work in cryptocurrency." She goes, "What's that?" I said, "Bitcoin." She goes, "What do you know about that?"
Yeah.
So I believe a lot of your listeners are interested in information. They're curious. They maybe not have stepped into the market yet, or they've stepped in and not done any homework, or maybe stepped in and just got flat lucky. And I believe that as people warm up to this and begin to venture into this industry, shows like yours will be great and important because they can learn things that will help them make sure they're making a decent investment, and getting into an asset that one day can do something great for them. Hey, I'm sure there's going to be another Bitcoin one day that hits 20,000. And there may be even whole new blockchain technologies that emerge out of this because, hey, a few years ago, Ethereum and blockchain and Bitcoin didn't exist, right?
And they've all come out of nowhere. And, I don't have a technical background. I can't explain to you the exact nuanced mathematical differences between the EOS blockchain and the Ethereum one and so on. We're trying to look at the trends here and the way that it's playing in the markets and in people's psychologies and motivations and try and work out where things are going. But the overall trend is definitely towards this more transparent, more liquid market. So in terms of CryptEquities, then, where are you at in terms of your development cycle? When will people be able to start using your service, or can they already?
Right now, we're just putting the infrastructure and the framework together. About 2 months ago, somebody said, "Oh, the new thing's an IEO, initial exchange offering." So we kind of went down that trail, talked to some people, and I don't know, it sounded kind of hokey to me. Well, you're going to do this, and then you switch over to this and do this. And I'm like, no. I said, because my stock brain went, I can see where the SEC, Securities Exchange Commission, will come in one day and go, punk.
Yep, that's just an ICO with a different paint job. Yeah.
Yeah. That's what they said about tokens. You can call it what you will. It's still a security. So we're building our framework more along the stock market type background. Dealing in the stock markets, we're a security, and we've embraced that term. Where the ICO, IEO, cryptocurrency world has shunned that world, we've embraced it to the degree we can. I know there are more laws, rules, and regulations coming out. It will shift, it will change, it will morph. Wyoming's law in 2 weeks or so will radically change things again. And we're just trying to stay on that wave of when we do officially launch. We're already in the process of acquiring some companies and putting them in our stable. So before we even launch, we'll already have assets in the bank.
Right. So people are not just investing in some intangible thing with.
Right. Hey, it's a good idea. Do it. We're actually doing this. I'll probably acquire 3 companies that are illiquid and dormant at this point. And our true asset is we know how to clean these companies up. So it's like buying a junk car. The tires are flat, the engine's blown up, paint job's peeling, and we go in and put a new engine in it. We put new tires on it, put a new paint job on it, and we find a new driver. And whether it's a technology we're in control of, which I'm working on launching 5 other companies right now. One of them is taking garbage and turning it into energy. And one of my goals is to stick it in one of these cars, which then increases the asset value of our cryptocurrency. So we're building some of the cars for ourselves. It builds asset value for the cryptocurrency. And then we're building and selling others these cars as well. So that's even the change in our industry.
So it's that mutual fund analogy again, spreading out your own interests and investments across all these different horizons where the future could explode in any direction, because we don't know. We haven't got a crystal ball, but we try and look at trends and where things are headed and cover all bases. It sounds like a nicely diversified approach.
The guy that I bought my shell company from the last time in 2006, he said, Bill, it's really rare anybody ever takes a company public, but it's even rarer somebody takes two companies public. And I was sitting there thinking, I think I can do 200 of these and you make a great employee. So he's actually coming into that role right now as an employee, and I'm trying to get a couple hundred companies.
Fantastic.
The cryptocurrency world
is
different. What's facilitating that.
Yeah, it just makes things like that possible.
Right.
It's such a different model of doing business. I think it's going to be really exciting to hear how you get on with this in the future, and I hope you'll come back and tell us how it's going. In the meantime, if people want to learn more about CryptEquities, where's the best place for them to connect with you online?
Well, we got a Facebook page and all those other social media things. Our website is cryptequities.com, cryptequities.com. And, we're constantly updating things and putting our announcements in. We're not launched yet, but we're basically putting the engine in the car right now. I guess that's the way to look at it, so that when we do take off, we're not going down the road and getting slammed or running into a tree.
Sure.
That 10 years from now, we're still growing.
Yeah, and it's important to do that first before you put the shiny chrome bits on. And
right.
All of that. Excellent.
It never made a car run any better.
No, that's true. Well, I think that's been an absolutely fascinating conversation. Thanks ever so much for joining us, Bill. I think it's probably going to give our listeners lots to think about. And I think to feel quite positive and excited about the future, which is how we look forward to leaving it with people. So thanks for joining Crypto Confidence.
Thank you. You have a great day.
Thanks for listening to Crypto Confidence. If you like what you hear, please do consider leaving us a review via your favorite podcasting app and joining the conversation online in whichever way you prefer. Full contact details are in the show notes for this episode. And remember, nothing in this podcast or our related social media, nor anything else published by BlockSparks OU at any location, is intended as financial, investment, or trading advice. Everything we write or say represents our personal opinions for your information, education, and entertainment only. You should not make any decisions based on anything we share with you, not without undertaking independent due diligence and consultation with appropriate professional advisors. Crypto Confidence is all about being smart and informed and making the right choices for you.